you. But it was a mixed quarter for PVR. Their revenue and EBITDA was above street expectations, but there were a slew of one-offs which hit their profitability this time around. The management, though, was quite confident. But Surabhi is here with more details on PVR's numbers. Surabhi.
Thanks so much for that. So PVR Inox reported its first ever quarterly numbers post-merger, and it was a decent set of numbers. The numbers are not comparable on a year-on-year basis, but they were better than what we have expected. Revenue came in at 1143 crores versus a poll of 1192 crores. EBITDA came in at 264 crores versus a poll of 216 crores, and margins have come in at 23%. Now it has reported a loss of 334 crores, but profitability was impacted by several one-off items like an impairment charge and also some merger-related expenses. They've also chosen a lower tax, tax bracket in FY23 and have charged deferred tax of 134 crores. So that has affected the profitability as well. Now, when you look at the internals, the occupancy was weak. It was down about 300 basis points, but the average ticket price and the spends per head, that was higher both on a year-on-year basis as well as on a when you compare it to the pre-COVID levels. For FY24, the company plans to open 150 to 175 new screens, and this is net of the 50 screens that they're planning to close due to, operational underperformance. Now, what we have to watch out for in FY24 is whether they recover their ad revenues and also what is the occupancy trajectory going forward.
Okay, all right, Surabhi. Well, on that note, let's listen in to what the management of PVR had to tell us earlier in the day.
Because the volatility is something which is very extreme. So if the movie does well, it does exceedingly well. And if the movie doesn't do well, then it completely tanks. So I think that volatility is something that has probably lasted longer than I thought. So it's lasted about 12 to 14 months now.
We should be anything between 6,000 to 7,000 crore revenue, depending upon how the box office performs. And we did about 150 million admissions. And, the hope is Q2, Q3, Q4 are going to be significantly better quarters. Yeah, I think margins, the focus this year, a lot of it is, operating leverage in the business, depending upon how box office performs. But, our focus is to get down to 18 to 20% operating margins during this year. That's going to be the focus of the business. I think, again, the immediate focus is to try to get back to pre-pandemic level because advertising revenues have definitely taken a big hit. So this year, our focus will be how soon can we get back to pre-pandemic level, cross a 500 crore kind of an advertising number. Things are definitely looking much better. And, you will see a lot of traction coming in that starting Q2 and in Q2 onwards.
Okay, so slew of new movies coming through, and PVR is very confident that the occupancy is definitely going to pick up. But the